Let me begin this way. Are commodity marketplace traders can make money again?
Well, in the physical space, it's pretty difficult these days. Margins have highly compressed, risks have increased. And with the absence of a lot of banks in the market and liquidity in principle, there are opportunities. So I would say going forward, yes, there's a lot of opportunities and you can make money again.
So if that's the case, why have so many commodities funds gone out of business? There are at least $9 billion plus commodity funds that have shuttered in the past 5 years.
Bluntly speaking, a lot of them haven't performed. And it was difficult in the last couple of years. We struggled at times because the whole quantitative easing aspect over the last couple of years has distorted markets, has distorted liquidity, has distorted volatility. The fundamental analysis has not worked as well as it had in the previous years. And so in many ways, I think what we've learned over the last couple of years is what we need to take on forward in order to make things better.
And what do you need to do?
I think in many ways you need to understand that this is a market that has much less liquidity than before. And with less liquidity, you'll basically have more distortion. And more distortion leads to opportunities, whether that's in the metal space or in the energy space or the agricultural space. We feel it most in the metal space because there's practically no funds out there anymore. There's no real bank that is actively growing and building a metals business. And that is actually where we're in the game.
Some people make the case that quantitative easing destroyed commodities the way it kind of destroyed macro investing. What will the withdrawal of QE mean to commodities trading and investing?
Well, that's a difficult question to answer, but in many ways taking liquidity out of the system will most likely have a strong impact on interest rates, and as such it'll definitely affect commodity markets. The question is, with withdrawal of quantitative easing, how much will it affect the global growth and the business cycle in itself? So will we see a recessive element? How will central banks, especially the Europeans, react to its interest rates policy? And that obviously might have an impact on commodities.
And will investors return to commodities when inflation returns to the economy? Or is that link, if you will, broken?
I wouldn't say the link is broken, but I would definitely say what we've seen in 2005 and 2010 will not be repeated. So back then you've seen all the consulting companies basically promoting commodities as part of an investment allocation, and I don't think that is coming back. If it is coming back, it is coming back at the peak of the next potential cycle. So what we will most likely see in the commodity space is selective investment from certain institutional players, but not as a whole, and you'll see a lot more specialized, dedicated investments in particular sectors within the commodity space.
Christoph, are you and your partners at Tiberius trading the trade tensions, if you will, and, for example, the Russian sanctions?
Yeah, of course. I mean, what has happened...
How?
Of course, we're in the physical space, we're in the derivative space, so we're exposed on a physical basis with certain countries, with certain products, as much as we are in the derivatives. So whenever there is tensions coming from either sanctions policy or tariff policy, it affects the global flow of goods, and as such, you need, as a metal merchant, to react accordingly, and as a derivatives trader, you need to act in the sense of how will that have an impact on your liquidity and your futures forward positions.
Have you made money on the trade sanctions and these trade tensions, these... For example, the tariffs that the Americans are putting on aluminum and steel?
Put it that way, we do like these kind of markets because they allow for volatility. And with volatility, obviously as a trader, you can make money.
You just pointed out, you're not just in futures, you're also in physical commodities.
That's
If
correct.
you're in physical commodities, you're competing with Glencore, you're competing with Trafigura.
Correct.
How do you compete with players like that?
Well, of course, we're much smaller than them, but at the same time, you know, there are niches, there are geographical niches, there are product niches that you can operate in. And lastly, as a physical metal merchant, you operate in the space of taking credit risk, of taking liquidity risks, and there are clearly, you know, openings in the market that allow for smaller players to participate successfully.
Like what, for example?
You look at geographies, emerging markets, where you have different kind of credit or counterparty risk. You look at products going away from the standard commodity of refined ingots into VAP, value-added products, for example, where as a trader you definitely have a space to play in. And then lastly, whilst the big players seem to control markets sometimes, you might be surprised to see that smaller players do actually get a piece of the cake.
They do seem to control the markets. Are they too powerful?
I think what we're seeing now with that void of liquidity from banks having gone, the metal merchants have created an oligopolistic structure again.
Not all the banks have gone.
Not all of them, that's true.
Goldman made as much money in the first 5 months of the year or so as it did all of last year. How is that possible? How much is Goldman getting back into the market in a big way?
My understanding is Goldman's DNA in commodities comes from their J. Aron days. So there is a whole different understanding when it comes to trading commodities. And I think they're getting it right by focusing more on commodities, especially when everybody's leaving the party.
What do you see them doing?
We see them obviously expanding on their metals trading teams. We see them taking more risks. We see them providing liquidity. So that is something we feel is helpful to the market.